90% of all retailer traders struggle with market timing. In many occasions, they will place their orders stop loss slightly below, hoping that the market will project into their TP levels. But lo and behold, it then traverses through their stop loss. I am of the opinion that you watching this video might have probably experienced this scenario, if not once, not twice, but many times. Today's info I'm about to convey to you is that you are going to learn how to time the market in order to get a perfect entry with the best risk to reward ratio at a bare minimum risk to the market exposure. No time to waste. Let's dive into the video. Immediately you open your chart, always make sure you put market structure into cognizance. By that I mean, let's take a look at the chart in front of us. Okay, here, what's the structure of the market? As you can see, price was creating higher point, lower point, higher point, lower point, higher point, lower point, thus giving us the clue that this market is a bullish market, basically called the uptrending market. Next, you want to identify your immediate support and resistance. For this scenario, we have our immediate resistance. Let's annotate it. At this level, we have our immediate support, which got created at that level. Now you want to wait for price to break resistance with an impulsive move to the upside, come back to that same level for the retest and continue moving in that direction. Otherwise, it will come back to that same level of resistance, break through, retest, and continue dropping to the downside. Or at a level of support, we want to see support got break to the downside, come back again for the retest at that same level and continue moving to the downside. Otherwise, it will come back to that same level of support, break through, retest, and continue moving in that direction. So if we take a look at our resistance level, immediately we got clue of the market structure, which is a bullish market structure. Price broke through our resistance with an impulsive move to the upside. Upon coming back to retest, how you could have taken this trade with confirmation. Remember, there are always three confirmations you should be always looking for on the retest of either resistance or support. Take a look. As price broke through our level of resistance, upon coming back to retest, confirmation number one, wait for a candle close. If you notice, the first candle, this candle here, which came in contact with our resistance, upon what? The broke of this same resistance level, what happened? See how it closes. It closes above our resistance. It traded through the resistance, thus giving us a very positive confirmation that this market is preparing to what? Shoot to the upside. For the second time it came, see this bearish candle, the way it closes. It closes exactly on what? Our resistance line. It fails to close below, giving us another second confirmation. Second positive confirmation tells us that this market is what? Preparing to shoot to the upside. The third candle in contact with the resistance, it ended up what? Closing below our resistance level, thus invalidating. Immediately that one happens, wait for the next candle. How it's going to close this? The next candle, it closes above our resistance line. And there comes in now the second confirmation, candlestick pattern, especially the engulfing pattern. If you noticed, we have our engulfing pattern which got formed at that level. You see the bullish engulfing pattern. So now we've seen two confirmations, the close of a candlestick on the retest. Then the third confirmation, you have to see what? Weak rejections. And as you can see here, we have our wick which was created. It rejected our resistance line. Upon forming this engulfing pattern, we also saw some sort of what? Mini wicks. Even at this level, Price was now what? Giving us weak rejection, until it finally decide and say, no, I'm ready to what? Move to the upside with what? 146 pip to the upside. Immediately price closes above our resistance line. Your stop loss slightly below the wick of the candle which was created before it closes above. Simple as it is, no complication. Take a look at the structure again. Market started creating lower low point, higher point, failing to what? Create another higher point, higher than this previous one. It ended up creating another higher point at this point. Low point, high point, another lower point, high point, lower point. So you notice that this lower point was lower than this, thus giving us a clue that what? Here at this level, we've already what? Broke a structure. You see, at that level, structure is being broken. And price started creating new lower low point, thus giving us a clue that the market has what? Changed. Shift in the market from what? An uptrend to a downtrend. Immediately you have clue of that. Next, you want to identify your immediate support and resistance. Price breaking this structure by creating this new lower point, it gives us immediately our level of what? Support. Let's annotate this guy. Also our immediate level of resistance, as you can see, immediately this lower low point was created is here at this level. We have our resistance at that level. So what next? You want to see at our level of resistance for either price to break resistance, come back on the retest and continue moving in that direction. Otherwise, it will come back to the same level of resistance, it will break through, retest, and continue moving to the downside. Or at a level of what? Support, we want to see support broke to the downside, upon coming to retest, it then what? Drop. Otherwise, it will come back to that same level of support, it will break through, upon coming back on the retest, and continue moving in that direction. At our level of support, price broke through with an impulsive move away from our level of support. You see, it broke through. Upon coming back for the retest, it then moved to the downside with huge momentum and volatility to the downside. How you could have taken this trade? Based upon our three confirmations, which I highlighted earlier on. Upon our three confirmations, we say number one, on the retest, we want to wait for a candle close to see whether if that candle is going to close above our support, thereby invalidating that retest, or it's going to close below that support, which is a positive confirmation that that support is going to hold. And if you notice this candle, the first candle, upon the break of this support, see how it closes. It closes exactly on our level of support. It didn't close above support, no. Thus giving us a valid confirmation, positive confirmation. And also confirmation number two, weakness. The weak rejections shows weakness in the market, which signifies that there's already a shift in the market sentiment. Okay, so if you notice the second candle here, it closes below, giving us bearish candle. You see, this is a very positive confirmation. You see, we've already have weak rejections showing weaknesses and shift in market sentiment. We already have what? The close of a candle. It closes exactly, the first candle closes exactly on our level of resistance and our level of support. And the second one even closed with bearish in the direction in which we want to sell. Immediately that one closes, with no hesitation, don't be afraid to shoot the market with your orders and your stop loss slightly above the wick. and see how the market displays all the way to the downside, giving 134 pips to the downside. Just a quick reminder, if this video is useful or is of any help to you, don't forget to give us a thumbs up, as it helps to grow the channel and also motivate me to create more content like this. Next, here we have another different structure of the market. As you can see, the structure of this market seems to be a sideways. Market was moving sideways. If you happen to find yourself in a situation like this, where the market is neither trending up, neither trending down, but moving sideways, I recommend you just stay out of the market, because it's not really ideal to trade in a range market, as it is sometimes very difficult. But for any reason you decided to trade in a range market, or you find yourself in a situation wherein the market is ranging, as you can see here, this is how I recommend you trade it. Simply by looking at the wicks. So wick rejections at resistance levels, immediately they are being formed, you have to wait patiently for price to approach those levels, with the intention of you shorting the market. Otherwise, take no short position. And as price approaches those areas, these are some of the confirmations you should be looking for, or these are the criteria price must fulfill before ever you take in a short position. As price approaches this level, you want to see price not closing above this level you've drawn at your resistance level, where the wicks were being formed. As you can see, you don't want to see a candle closing above that level, but instead you want to see price coming into that level, rejecting, and also closing below your wicks. For the first time when price came, you see it traded into that level, and finally the next candle it closed bearish, it drops down. The next one again, it came, and how this candle closes, it closes bearish and continues to drop. The next one, as you can see, it tries to trade through, broke. You see, at this point in time, the moment it break above, a candle closes above your wick, your wicks, immediately candle closes above, it has already invalidated. Do not trade, wait and see the next level of wicks at the resistance level. At the next level of wicks, we notice price never attempted to reach through, but what happened? The next candle, it broke through and closes below this level of resistance, the wicks. Immediately that happens, you can decide to take a trade at that level where the candle closes, or two, you can take another trade upon the retest into that same level. As you can see, price came and retested that same level. There, you can take that trade and your stop loss slightly below, as you can see. And then the market drops all the way to the downside. You see, the next level of structural low at that level, you see. Also, if you take a look at this level, as price moved to the upside, you see here it created some sort of wicks. You wait patiently as price approaches that same level of wick. Let's annotate it here, this wicks. You see, as price approaches that same level of wick at your level of resistance, you want to see price fulfilling your criteria. You don't want to see a candle closing above that level of what? Wick or resistance level. Instead, you want to see price trading into that level and close below. Here, where did that price closes? It closes here. As price traded through that level of wick at our level of resistance, what happened? The next candle, it gives us a bearish candle closing at this price level. There you can decide to enter your first entry position, or you wait for the retest of that same level. As you can see, when price closes at this level, it came back for the retest. Upon retesting, you can decide to take another trade opportunity, risking just your stop loss slightly above. You see this like 7 pip stop loss, and see how the market then displays all the way to the downside, giving you 126 pips to the downside. So for any reason you find yourself in a ranging market, this is how I recommend you trade. But overall, my general experience of ranging market, whenever market is ranging, I don't normally tend to trade. I just chill and relax. Next, for a level of what? Support in a ranging market, you also extend. You want to see price coming into that level of support, in bracket the wicks. Upon price coming to it, you want to see price trade into that level, and as price trade into that level, your intention or your expectation is to long the market, is to go long. And before going long, you want to also see price fulfilling this criteria. A candle must not close below that level. As you can see here, it came, it traded through, and later what? It rejected and closed above our level of what? Support. The next candle, it gave us what? A bullish candle, thus confirming that what? The market will continue shooting to the next level of what? Resistance, which was created here as well. As price came, the first candle here, it closes below, which invalidates our, if ever you are intending to take a long position, it has already invalidated it because of what? This candle which closed below our level of wicks, in bracket support. So you have to wait patiently. The next candle, you see, it then shot back into the range, closing above our level of support. You can decide to take a trade upon the closure of that candle, or you wait for the retest. In this case, there was no retest, and the market continue moving to the next level of what? Resistance. So basically, this is how I recommend you trade a ranging market if ever you find yourself in a situation like this, or if by any means you feel like you want to trade or want to catch some pips from the market. This is how I recommend you do.